All right. All right. Hi, my name is Timothy Hirsch. What I'm not going to do today is I'm not going to talk about my business and what I do. This is purely supposed to be informational, so I'm going to jump right into it and really start at the top where it all starts for when it comes to health insurance. This is the ACA, also known as Obamacare. So first off, what I see is the biggest problem for people when they do their health insurance is they really can't weigh or don't weigh all of their options. So they don't have everything on the table and they're only looking at a specific plan. And everyone's got their own reasons why they do it or their obstacles, why they couldn't find all the information. So what this is intended to do is put it all into one informational seminar so you can understand it, absorb it, and know it. So it all starts with the Affordable Care Act. And I'm not going to get too much into what the ACA is. I know that's really boring, but it's important to know because a lot of people misconstrue. They'll say to me something along the lines of, I don't want an Obamacare plan. Well, to have something that is health insurance, you need to have Obamacare because the Affordable Care Act is a piece of legislation nicknamed Obamacare. So in New Hampshire, and we're talking about New Hampshire specifically, there are 17 health insurance plans available. That's it. This is all standardized. If you want a health insurance plan, you have the choice of 17 plans between 3 companies. These 3 companies are Anthem, Harvard Pilgrim, and AM Better. Now I know we're talking mostly about New Hampshire here, but it really is the same case anywhere in the country. So if you're in Pennsylvania or if you're in Texas, there might be a few more companies or even maybe only 2 companies. There may be 24 plans or there may be 12 plans. But this is pretty common and it's going to work the same way in basically every state. Massachusetts, it's its own little animal because they have their own rules, but pretty much the same there as well. So between these, there are similarities and there are differences. Now, why is this important? Well, similarities and differences are the reason that you're going to pick one of these 17 plans versus another one, or one of these companies versus the other company. There's got to be some sort of difference. So we'll start with similarities. They're all governed by the ACA. So they all have a certain criteria they need to meet in order to be health insurance. Who tells us that? The Affordable Care Act does. They're all going to cover the same benefits. So I'll get asked quite a bit. I want in my plan prescription coverage, doctor visits, I don't want maternity coverage, or whatever the case may be. Well, if you're purchasing these plans, they're all going to have the same benefits. And to branch off of this, they're all going to have prescriptions, doctor visits, hospital stays, 100% preventative service. They're all going to have mental health care. They're all going to have maternity coverage. And there's obviously a lot more, but you kind of get the picture here. You can't customize these health insurance plans. They are what they are. Now, there's some more similarities, and one is that they all have an out-of-pocket maximum. This is an underlooked at part of what health insurance is, and it's probably one of the most important numbers. It's basically someone's exposure in a year to what they might pay out of their pocket. It goes up every year, shocking, I know. But in 2019, this number is going to be $7,900 for an individual. Meaning, a plan cannot cost someone more out of pocket in a year besides your monthly premium, so your copays, your deductibles, are more than $7,900. So if you had $1 million in doctor's bills, that's what the member would be responsible for. And I say it's important. I know it's a high number, and most people are probably thinking, wow, that's a lot. It is, but pre-Obamacare, there was no cap to a lot of plans. So that is a very useful thing. So they all are tiered in what they call metallic colors: bronze, silver, gold, and there are some platinum plans out there, but typically you don't see platinum plans. There's none in New Hampshire. And all this simply means these are your lowest cost plans, your highest deductibles, highest out-of-pocket costs, your middle ones, then gold, and then platinum would be your most expensive plans. And all 17 of these plans have to fall into one of those categories. So that's similar between them. But in a nutshell, anyone can purchase these plans. As long as you are a U.S. citizen, you can go on and purchase a health insurance plan. You'll need to qualify for it. So it makes it simple. There's coverage for pre-existing conditions. Anyone can sign up. Now, differences. Big one, monthly rate, what we pay. Obviously, that's a big difference. Your out-of-pocket costs, which I think gets looked over a little bit. A lot of people will look at the company and they'll look at their monthly price. What's this plan going to cost me if I actually need to go use it? And it's going to vary by plan depending on which metallic one you're buying. Copays and coinsurance. I think people look at this one too much because it depends where those copays are. There's something called first dollar copays. And this means simply if your plan has a $3,000 deductible and you go to a doctor's visit, does your plan allow you to pay a copay, $20, $30, whatever it is, instead of having to pay the full price until you reach a $3,000 annual deductible? There's a lot of value in there in a plan. That's what most people want when they go to the doctors. But especially on the bronze plans, a lot of them won't have it. So in a nutshell, that's the ACA. It's very structured, and these plans are really made to fit in a box. So it's pretty easy to talk about. I don't think you need to get too complicated with it, because at the end of the day, there's 17 plans, 3 companies, and you can't customize the plans. They're all set prices. The only thing the price is based off of is somebody's age. So next we're going to talk about something called a health share. This is what is probably new to a lot of people watching. Now, a health share goes by but a few different names. These are a lot harder to talk about. As a health insurance plan fit in a box, a health share is not going to be regulated by the ACA, so there's a lot of variations. So if you go on Google and you type in health share, you might read something that pertains to some health shares, and it might not pertain to other health shares. So these can make plans the way they want to. And I'm literally going to read some definitions I found online, and it helps talk about what these are. So they go by some different names: health share, sharing ministry, cost sharing, and healthcare sharing ministry. So it's defined as a healthcare sharing ministry is an organization that facilitates sharing of healthcare costs among individual members in the United States who have a common ethical or religious belief. So that common ethical or religious belief is known as a statement of standards or a statement of beliefs. They're going to have one or the other. And there might be some people saying now, like, oh, I've heard of this before. Yeah, there's something with like Christian healthcare. That's along the same lines of what we're going to be talking about here. A health share program is not offered by insurance companies, but rather recognized medical cost sharing organizations, sometimes called healthcare sharing ministries. Because these programs are not insurance, they do not fall under state and federal regulations governing health insurance. That ACA, the Obamacare, doesn't tell these what to do. They get to tell themselves what to do. So these used to be a little bit of a headache in 2018 and prior. Why? because only some of the companies met that federal mandate. And what the federal mandate said was, if you don't have insurance, you get a tax penalty. Some people are aware, but some aren't. This is gone for 2019. So it makes a health share even a more valuable option for a lot of people, and it makes it make more sense because you don't have to worry about tax penalties. So some of the companies out there are MediShare, which is a very popular Christian one, Liberty Health Share, Alera, Altrua, Sedera, Solidarity, Christian Healthcare Ministry, Samaritan, Plantston, and there's even some localized smaller ones. So there's a lot of options is kind of what I'm trying to say. And each one has its own little niche, but that's for each person to figure out which one's going to work for them. So I sometimes compare these to like an association. A health share is going to have an ethical standard or a religious standard. Just like when you go to join an association, they have a membership requirement. These are going to work that same way. It's up to an individual to understand a health share, be comfortable with it, want to look at that, and then find the health share that matches their moral guidelines. Now, the way I like to specify why somebody would choose a health share over insurance, or why they would choose an insurance plan over a health share, and I hate to oversimplify that, this is my thing, it's not like an official standard, but if you are receiving what is known as a subsidy or financial assistance through using the ACA plans, which you purchase on healthcare.gov, I think everyone knows that website, that's going to make a lot of sense because the federal government is helping you pay for a portion of your health insurance plan based on your income. So if your $1,000 health insurance plan is now $200, probably going to make a lot of sense. Also, if you have some pre-existing conditions that may need treatment, the Affordable Care Act or health insurance plans are going to make a lot of sense because they don't take into consideration pre-existing conditions. And here comes the catch with the health share is that they are for healthier individuals. So they're going to exclude pre-existing conditions. I don't want to dive too much into that, but in a nutshell, a pre-existing condition is something someone's received treatment for, has shown symptoms of, or been diagnosed with in the last 36 months. And it'll vary from company to company, so it's something to consider. But if all the rest makes sense and you don't have worries of pre-existing conditions, this should be on the table for what you're considering. All right, so we're going to do health share versus health insurance. We're going to do pros and cons. Things to look out for and things that are going to make a lot of sense. And this will be the first step where this is probably going to start making sense and being new information to people where it's, hey, this might be something for me or it's not something for me. So, pros of health insurance. They cover pre-existing conditions. That's huge. I mean, prior to Obamacare, if someone had cancer and they needed health insurance, there was a few ways they might be able to get it, but that was a very difficult thing. Now it's not even a consideration. So that's great that it's there. Subsidies. And I'll use this interchangeably. A subsidy is a tax credit, an advanced premium tax credit, but it's financial assistance based on someone's income, their household combined income, that allows them to get discounted health insurance. Plans are easy to compare. I know a lot of people probably think insurance isn't easy, but I think from my first diagram, there's not too much to think about with those insurance plans. You can't really go wrong or do something wrong. You're not going to miss a coverage. Out-of-pocket maximum, that's $7,900. And I know some people probably think that's a negative, but it's still good that it is in there. So negatives, high monthly cost. I'm a man of simplicity. Health insurance boils down to a couple things for most people. I want my health care to be as least expensive as I can make it, and I want to access the doctors I can go to. So cost is going to be a huge one. Not only monthly cost in your premium, but also your high out-of-pocket costs. When you actually go to use your insurance, and I know everyone's heard that before, I can't afford to use my insurance. Not customizable. Not sure if customizable is a word, but I'll write it in here. Prices go up every year. So every year we get a plan change, our prices change. It's not, when's the last time you've seen them go down? Here's the other big one, small networks. Almost primarily for the individual health insurance, for someone who is not getting insurance through their business or their company, they're probably going to be in an HMO, and it's probably going to be limited to mostly in-state doctors. If you live on a border, or you live in a place like Las Vegas where there's only Vegas and there's nothing around it, that's kind of a pain in the butt. That's not a good thing to be able to access specialists and things of that nature. Pros of a health share. So I'm always probably most taken back and confused about how this isn't more common, because health shares work across state lines. So everything our politicians and everyone talks about that we need for a health coverage option, this is how health shares work. If I buy a plan in New Hampshire, Alaska, Texas, it's the same coverage, same price. Even if I move, nothing changes. That first option with the ACA and health insurance plans, that is regulated by every state department of insurance. It changes by every county what plans are being offered. This is universal. So it's easy for someone to just look at it and have one set of pricing and not have to figure out where they are, where they might move to. Low monthly cost. I'm sure that's a nice thing. And then low out-of-pocket cost. And I'll asterisk that too, as compared to regular health insurance. Health coverage in general is not going to be cheap, but let's keep our costs as low as we possibly can. They're customizable. Very customizable. Again, I don't know if that's a word, but we're using it. You can make these plans in so many different variations. There's a lot more companies out there, and you can find the one that works for you. It's going to be different. It's not going to be put in that box. And I can't even tell you how many different ways to put these together there are. We'll go to the cons. They talk a different language. And what I mean by that is we've been programmed for these words like copay, deductible, out-of-pocket maximum, monthly premium. These are all insurance terms that the insurance industry has given us, and they've just become second nature to us. A health share is not insurance, and they cannot use those terms. So an example would be a monthly premium. By most of these are going to be called a monthly contribution. And they'll have their different language for their different things to replace a copay, and there's always a word that's similar to what the insurance term is. But I'm putting it as a negative because anything that's different and then we have to get used to, it's a pain in the butt. So it is a negative, at least at first. You need to find the one that aligns with your morals. So there's a bit of a search going on there. You got to take some time and effort to put into this. There's a different claims process most of the time. Some use a similar one. And I'll give an example here. The health share that I'm with, if you go into for a catastrophic claim, and I don't like to throw that word around because it means different things to different people, but if you're going for something major, surgery or something like that, you actually go in as a cash patient. You actually get the invoice from the doctor, send it to the health share, and they send you the money to pay the doctor. At first I was like, ooh, I don't know if I'm going to like that. But what we found, and my wife and I had this experience, was that when we had insurance coverage, we had this situation where we went for something and the doctor bills the insurance company. The insurance company is telling us they paid the doctor, but the doctor keeps sending us a bill saying we don't see the money. So we're the middleman in this, where One person saying they paid, one person saying they haven't, and they should just talk to each other, but they don't. So even though it's different, once you get used to it, it's not bad, and it's actually worked out very well for us. Not offered by insurance companies. Can take that as a positive or a negative, but we'll say it's a negative. And I did forget one over here. Very important one. Large, national, PPO, networks, and even sometimes any doctor or hospital, anywhere in the country. So it's a huge advantage right there. So put these up, stack them up against each other, pros and cons. It sounds pretty good. But I think where it really is going to start making sense, let's put some numbers to this. So we're going to do health share. We're going to look at a 50-year-old person in New Hampshire, and we're going to look at a 40-year-old couple with 2 kids. Comes down to numbers, right? I mean, it's a lot of this is math. And is going to dictate what's going to make the most sense. Am I saving money here? Is this going to make sense for me and my family? All right, so we're going to start with the insurance column here. All right, I did look at the zip code 03076 because that's where we are. So the range for, and I'm going to do a range. The range for a 50-year-old person in New Hampshire is $423 a month to $781. So the $423 plan is going to have somewhere around a $7,500 deductible. No first dollar copays. The metallic color is going to be bronze. So you have a lot of out-of-pocket costs. Even on the $781, you're looking at, I believe that one has a $1,000 deductible. And you're going to have about a $5,000 out-of-pocket maximum. So you can still have the potential of quite a bit out of pocket, even though you're paying the top dollar for it. Look at the 40-year-old couple with 2 kids. They're going to be $969 on the low end to what I would call a mortgage payment, $1,786 on the high end for a family of 4 trying to pay for insurance without a subsidy. Same deal. Bronze plan, that's going to be the $969. You're not going to get much beyond your wellness visits that are covered in any plan before you're dishing out money for all your services. So when it comes to a health share, I want to kind of preface something. Health shares, sometimes we layer benefits. So what that means is, and it sounds counterintuitive, is sometimes you use multiple plans. This is the customizable piece to come out with the plan you're looking for. I mean, it's all up to that person's decision of what they want to do, but we'll look at it because we're making it comparable to the coverage in here, but it might take 2 or 3 plans. But when you see the price breakdown, that's why it really makes sense. So I'm going to use 2 popular different health shares, completely different ones, and I'm going to layer these plans. So the health share part, which you think of the catastrophic part, it has a $2,500 IUA. That is individual unshareable amount. That's the part that is similar to a deductible, also similar to an out-of-pocket maximum. Meaning that worst case scenario, where over here you're out of pocket $7,900, you're out of pocket $2,500. This part of it is $200 a month. Some people stop there and say, you know what, $200 a month, less than half of the cheapest plan there, I'll pay for all the small things. Cool, that's fine. Some people will say, I want a plan for my common visits. Well, the way this is going to work is you have no deductible for your doctor's visits, lab work, MRIs, CT scans, specialist visits, prescriptions. So you have first dollar copays for all your common services. And when you put this with it, that's another $150. You come out to $350 a month. So about almost $75 less than that option. You have far less out-of-pocket max, and you have copays for all your common visits, and you're still saving money on a monthly basis. Probably why it starts to make sense. So completely different health share. This one's going to have what's known as a $2,750 MRA. Same as an IUA, except it means member responsibility amount. So they're responsible on a big claim, $2,750. We put a copay plan in there. Same deal, no deductible. For the family of 4, it's, the health share amount is $290. For this one, it is $250. And we actually put an accident plan in here as well. I'm not going to get too much into what this is, but you can think of AFLAC, those types of benefits, some money coming in case something happens. If you really want a health plan that's going to protect your finances, not a bad idea. This is $109 a month. You're going to notice the older you are, the bigger the family, the more savings that you're going to find. $649 a month. Over $300 less than the cheapest bronze plan. And you have a plan that you're going to have much less out-of-pocket exposure. You can see more doctors. If you're healthy, this should at least be on the table. And I know I picked 2 health shares here, but you're not going to see much difference going to another health share. You know, again, it's that ethical or religious belief, whichever direction you want to go. But you're going to find this very similar. You'll find slightly different pricing and how they layer their plans, but that's pretty much the savings you're going to find. I usually like to say it's about 40 to 60% less in your monthly costs, and you're going to lower your out-of-pocket exposure. So last part I'm going to cover here, take up too much time. All right, what you need to consider buying a health share or looking into health shares. Where you want to start usually is the member guideline. Everyone has it. So this is going to tell you any exclusions that are in the policy, any what their pre-existing guidelines are, what their ethical guidelines are. They're going to talk about themselves and what they are as an organization and what they expect of their members. Some of the typical things you'll hear is you agree to live a clean and healthy lifestyle. That's not too bad. I think a lot of people who live a clean and healthy lifestyle probably think, wow, I wish I could pay less for my health insurance because I live a clean, healthy lifestyle. But that's a great place to start, very detailed. One you want to look for in there is some of these ones will exclude cancer for the first year. Some do, some don't. That's one that you'd want to look for in there. And you may need to layer it with a cancer policy for 1 year. But there's enough budget usually to do that and still save yourself a considerable amount of money. So you want to look at those exclusions. Cancer being a big one. Then after the year, then you're fully covered for cancer. You drop the cancer policy. You want to look into layering these. So just multiple plans. Again, I know it's counterintuitive, but it's all about keeping the monthly costs down, protecting ourselves if something happens. Know how they do claims. This is probably the number one most frustrating part. You'll have a husband and a wife. The wife will set this all up. The husband will go to use the plan and he's going to be like, I'm a cash patient. I just wanted to show my card. This is what I'm used to. You got to understand it, because if you go to use it and you have an experience like that and it's negative, chances are you're going to be like, what is this? You know, it's not right. But it might take a little getting used to, but if you understand it going into it, it's going to help a ton. Learn their terminology. It's all similar, but it's different. So learn their terminology. Know what the difference is when you're talking about this. At least have a decent understanding. Again, so you're not confused when you have it and you go to use it. And the last one is, what specifically, how does this differ from my health insurance that I know, love, and I'm used to? I know I'm going to save $400 a month, but what's going to be different about it? Again, set that expectation so when you go to use it, there's going to be something in there that's called teledoc. I know I'm just kind of fitting this in, but if I could be an advocate for anything in the health coverage world, teledoc, where you talk to a doctor over the phone and you get your basic prescriptions, basically comes with every health share membership. 3 in the morning, the kids are crying and they need a rash cream or something. It's a lot easier than going to urgent care. But I think when people get a full understanding of all this and they go into it eyes wide open, they have a good experience and you have a chance to save some money. So that is all I have for today. I really appreciate anyone watching. I do have some links on the bottom of this YouTube video you can check out, link you right to some of the websites where you can look at these all as one instead of having to go all over the place to find them. Please like, share the video, and thanks for watching today.